Well, what a very significant week we've had. We are at minus 51 on the risk on off model, and all three models are now in TLT. The weekly one never went into risk on. The daily crossed yesterday, and the monthly crossed today on the last day of the month. As you can see in, if you scroll down and have a look uh, at the MA differences. So it went from +8 to -15 even on the monthly. So all three models are in TLT. We've had a fantastic week following the moves into TLT. In fact, we are long of the very short end. If you look at deviations, this actually tells you that the market is likely to bounce over the course of next week at some stage. Every time it drops into this green area, it's a buy for further jumps towards this dotted line. If you you can see better, we will bounce at some stage back towards 2800, but for the time being we are definitely in risk off, but we do not want to be short of ES very much further than the 27-23 area. That is going to be a wonderful area to pick it up over the course of the first couple of days of next week. In fact, if you go to the counter trend tab, you will see that the weekly model with the RSI strategy has given a buy signal. That is likely to give us at least 1% to 2% on the upside. So please be careful of this. We are now in a counter trend situation where we could easily have a very interesting bounce to sell into at some stage. Well, after a big macro week, always good to see what the fundamentals are doing. We have now fairly impressively broken the time 16 line with that famous Trump tweet. So we just showing you where the times 15 one is, where the market often goes to retrace and bounce from. Well, that doesn't really come till 26.25. Have it in the back of your mind. 26.25 was a level that we had huge amounts of fun at last year, buying it a couple of times for bounces all the way up to close to 2800, and we did that very well with options. And should we get there again, we shall try it again, because the times 15 Blue Angel is a very, very important line that the market often retraces to in times of uncertainty. And here we are, my favorite chart. We've broken, the 2-year has broken decisively as we said it would, and here we are. I covered a little bit at that line, which is no longer relevant, I guess, thinking I'd be smart, but we've gone through 198 and basically we are on our way to 178, and after that 142. I just want to show you for the sake of argument where the 2-year was. Well, the 2-year was all the way down at around the 60 basis points, 60-70 basis points. I think there is a decent chance that we revisit those levels if we are to have any kind of recession. I always say 2 years as optionality. Do not give up the optionality. Do not lose your position. By all means, trim and trail. You should trim and trail, but don't lose the entirety of your position. Any kind of move back towards 205, 206, it's going to be an absolutely wonderful opportunity to reinstate a full position and even buy more options. I'm pretty convinced that this is going to go a long, long way. The other chart that I've been banging on about for such a long time, here it is. It's broken. it's going to basically around 210. Minus 210 is going to be the level that is going to trade at some stage over the next 2, 3, 4 weeks in bunds against 10-year notes. If we have a look at the bunds, they are really in uncharted territory. Here we have the bund. It broke my minus 16 level that was so important and that I covered all my long futures at, and it's gone through to minus 20, which is the all-time low. To me, this low here was more important. This was just a spike. This could turn out to be a spike? I doubt it, though. Could it go to minus 25? Yes, easily. But from the chart I've just shown you before this one, it is obvious to me that the 10-year note is going to perform better than the bund. So really not much to say, but have a look at where we think DXY will go as a result of the narrowing of the spreads and what the timing is likely to be. This is a daily chart of DXY. If we enlarge it, we'll see how it keeps on trying and it keeps on failing. To me, it's just a question of time before this gives up the ghost. First level here is 97.50 from where it bounced, as I thought it would. I didn't think it would go as high as this, but all it's doing is building more kinetic energy. To me, volatility is so cheap, you've got to be long of it. The wave of volatility will move from bonds and equities, and finally it'll hit foreign exchange. When it does, the move down to the 96.50 level is almost assured, and when it breaks that and breaks the 200-day moving average, which is this line here, I shall make it a little bit larger so you can see it. It's right on top of the 96.50. In a few days and weeks, it'll be, it'll be a trifecta. It'll be this support line, it'll be the 200-day moving average, it'll be 96.50, and they're all basically conjunct this kind of time level. That is when you really want to go berserk, because then it really will move a long way. At the moment, you want to have calls and have be delta hedged, as I am, because you will pick up some gamma. But when this breaks and you have a closing break of 96.50, the 200 and this support line, that is when the dollar will really start motoring on the downside. This is a weekly chart of DXY. If I enlarge it, I'm really expecting something like this. The market breaks, spends a couple of months sideways, and then breaks 96.50 and never looks back and comes all the way down to the support trend line. If we go back, where does that support trend line come in here? Well, not until around 90. So, you're talking about a good 10% move, and that is what I at some stage hope to see. The reason why you have to be long of calls is simply because timing wise we could go still up towards 99.79 and then 101.92. Those are these levels here, simply because weight of money. It could be that there is nothing better than the dollar, but gold is actually saying not. I told you last week that I upped my my gold allocation. If we look at a weekly chart, to me it looks like gold over the next couple of weeks is going to go to 1344, that kind of level, and then it just buggers around sideways for a while and then breaks this this triangle, and then we're probably off to the races. 5-year notes, well, any kind of bounce over over on the way to 213 is a massive sell. First objective is here, 161 in terms of yield. You can see how far that has to go still. To me, that is where the 5-year is headed over the course of the next month or so. This is now the 10-year. The first support is around 203. Any kind of a bounce to this kind of level, which is 236, is a sell, and ultimately I expect it to go down to 169. That is the level that I'm looking at in the end. You can see how fast, when it does break, it gets there. This is like 2 months. This is a weekly chart, don't forget. You can see from here, this is like 2.5 months. So over the course of the summer, while equities puke, you really should expect a much stronger bond market. This is an hourly chart of ES. I've drawn the projections 2736 and 2677. 2677 to me is the Powell put level. If we don't bounce from 2735 and 2725, if you remember, that used to be a big level, 2725, the whole of last year, and we go down to 2677, we are bound to have at least a 50 pointer from 2677. I doubt people will be that panicky that they sell it through the Powell put. To me, that is a fantastically huge level, 2677, but I think 2735 to 2725 is going to catch it for the early part of next week. If we go to a weekly time frame, I want to show you this because of that. We are getting a sell signal in the MACD. On the weeklies, you can see that it's closed the week below all sorts of important moving average levels. I would have thought that this market at some stage, 2677 over the course of the next couple of weeks, why not? Resistance is going to be 2775. I think that's going to be hard to break, and then 100 points lower. This is what the weeklies are saying. The monthly candle is absolutely awful, so I really don't expect that there's going to be much problem with actually hitting those levels. To me, this is the 2675 level here is going to be as important as anything that we could possibly hope to see over the course of the next, I don't know, 3 or 4 days. After that, a certain bounce before we try it again. I'm showing you the transports because they are just getting smashed, aren't they? They keep on closing at the lows. They are headed for this gap, 9,300. This is going to be a very important level. It just shows you that we definitely have more room to go in ES before this is satisfied. This is a weekly chart of the DAX. If we enlarge these last levels here, the DAX did meet the 0.382 retracement of this whole move. And now its objectives really are somewhere around here, 11,550 all the way down to 11,450. 11,430 was a very, very important level on the way down. 11,366 also, and the market just absorbed it. You can see how long it absorbed and held. Well, I think we see those levels again. certainly with ES going down to the level that I think it'll go down to eventually, which is the 2677 level. The reason why I am not gung-ho bearish is because what volatility is showing. Volatility is basically very contained. It's not making new highs. It's saying that yes, the market is going down, risk is going down, but don't think that this is going to be a one-way street. It's going to be a tradable market. This is, if you look at what it did back in October, it's basically trading around those levels, and it's just saying that really 2677 is going to be about as far as this market goes. It's unlikely. It's really has not even traded above 1963 once this week, even with a Trump tweet, which really surprised me. And that tells me that the market is not as afraid of heightened volatility this time round as it was last time round. So really, anything with a 20 big figure, probably a sell, and it comes all the way back down towards the 16 big figure. To me, that's a market which is trading, I don't know, 2677, 2775. If you want a confirmation of risk off, this is DBC, this is commodities. As you can see, oil and everything else is absolutely getting destroyed. That to me says that there is some sort of a slowdown, and that's why I'm quite confident that ES is going to be on the back foot for the foreseeable future, certainly until Trump does something amazing and stops this tariff war that he seems to be so set on fighting. Well, with this we come to the biases for next week. 5s and 10s, I've said everything there is to be said. It broke 213, which was the significant level in 5 years, and as soon as it did that, it started plunging. So 193 and 1.877 and finally 161 are your objectives in the 5 year, with the 213 level as a stop. 236 is the upside. We must not break the 10 year. 202 and 169 eventually are the objectives. The 2-year note, well, my favorite, it broke the 217. It can now go all the way down to 141 via 177, and if the Fed starts easing, I'm sure eventually it'll go to sub 1%. It has huge optionality. Don't lose the entirety of your position. The bunds, I really don't know what to make of the bunds now that they've got to minus 16. I just showed you on the chart. To me, bunds now you forget about, and then you just trade them against the 10-year note. You saw what the objective is in that spread between the 10-year and the bunds. SPX 2737 and 2725 are the immediate objectives. Below that you have the very important 2677. To me that is as important as it gets. That's the Powell put level. That's the level that the market powered through and went 200 points through when Powell said everything's all right boys, go for it. To me, if it goes through that level, there is something very bad happening. But I think the fact that the bonds are coming off so much, and the fact that we are in a pretty good economic situation as far as we can see for the time being, that is actually going to be the floor to the market, and that would be a good level to buy calls. NQ, I still don't like it. I think it could fall a lot further than SPX. I don't have any buy levels until below 7,000, and even that I'm really not very sure about. RUT, much the same. No point in even trying to catch that falling knife. And VIX 1960 is going to be a very, very important level. If we break through that, then I think 26.77 is in danger, but until that breaks, I don't think so. Here we are. These are the levels, new levels in DAX. 11,500 to 11,430. I think I would be interested in trying along there. And DXY, I've said all there is to be said. 96.50 is the long straddle level for the next several months. When he gets through there, I think the dollar has probably 7 or 8 percentage points to go. Thank you very much indeed, and tweet you on Monday.